Good afternoon. This is Jeff Clark from GoldenCare USA, Regional Director here with GoldenCare USA. Been with the company for 25 years. Um, we do a variety of topics here to try to help agents with the long-term care sales, whether it be marketing or product or anything we can kind of do to help you produce more business, get more clients, close more sales, et cetera, et cetera. So this is a new topic, and it's one I think that you're probably going to see a lot more of. Just in the title of it, longevity care insurance, a shifting market. More or less, we're just talking about the fact that we're seeing the market change a little bit, moving more towards, kind of a short-term emphasis. Still a great industry, still a great market out there, plenty of people that need it. But we're just seeing kind of a shift in focus by some of the carriers, by some of the agents. And as agents, we're just continually trying to help as many people as we can. So that's kind of the premise of this webinar, was just more or less to talk about how the fact that plans are changing, things are changing a little bit, but I hope you get out of this is one that hasn't changed is the need for long-term care out there by Americans. There's so many folks that need the long-term care, short-term care, home health care, or generally sweeping longevity care planning. So with all that, let me go ahead and get started. Looks like we're at the top of the order. So again, my name is Jeff Clark, GoldenCare USA. Thank you everyone for attending. Okay, little history. So kind of talk about this. So GoldenCare has been established in '76. We've been kind of a leader in the long-term care industry. We dove completely into that. We've eat, breathe, and sleep long-term care for the better part of 3 decades. So what's happened? Why the shift? Well, you can't ignore the data. This is statistics again from 222 Milliman's LT survey of American Association for Long-Term Care. Nearly half the people between 70 and 75 were declined for long-term care. A third of those for 65 to 69. So if you'll notice, it's getting tougher to place long-term care. I think everyone knows that. And so what are we doing with all these people? Well, all these people that want it, we can't get to them. So you remember the good old days of long-term care? This is back when I started writing policies. And I remember as I was putting some of these slides together, just thinking, boy, we never really had much trouble back then. Underwriting was a breeze. I got a steady diet. I got a stack of lead cards. It kind of dates me, but I get a stack of lead cards. I'd hop in my car and I would go about an hour west of the Minneapolis area, some place where I couldn't go back home and between appointments. And I would knock on doors, and these people had sent in the long-term care, interest in obtaining long-term care card. And I bet you half, if not 3/4 of the people I would go to their house would be 70-year-olds. People certainly older than 65. People that have probably already had some trouble, either a spouse, a brother, a friend, or they were all too aware that they needed care. And by tell you what, we'd write them up and they would get issued. Back then, things like sleep apnea, diabetic, joint replacements, they weren't that huge of a problem to get underwritten. You could move them to different carriers. You had carriers, so again, if no one else would take it, we always had Penn Treaty to back up with, right? So Penn Treaty took all the stuff that we couldn't get issued. So that was the good old days of underwriting. Now premiums, boy, premiums were so, as it turns out, they were terribly underpriced, of course, but you could get an unlimited policy with 5% compound inflation for less than half of what a much smaller conservative policy costs now. If you want to do a 3% compound and a 5-year benefit, it's half the price. Or it's the old unlimited and 5% compound were again half than what you'd buy now. It's the pricing has gotten so crazy, and I guess it's more correct now. So they've had a lot more time to look at the claims history. Carriers have gotten their kind of arms around how to price this stuff. With something like, I don't know, $7 million or $8 million a day paid in claims, however many billion, 27 billion paid out. So they have a lot better feel on how to price it. And so back in the old days, they didn't. So premiums were affordable. Everyone's getting issued, and you had all kinds of carriers. You had just numerous carriers. I think when I started, I think I repped about 15 carriers, the old Penn Treaties and American Travelers. And so you had all these products. Prices were low. Things were getting issued. It was great. I came to that industry, I guess, around 1997, and I did pretty well selling long-term care. I guess I didn't realize it could get tougher. So then versus now, I mentioned the carriers. About 20 years ago, there was probably over 50 companies selling long-term care, right? And now the industry is significantly struck. If you look at the carriers that are available to us now in the long-term care arena, there's 6. But if you look at those 6, there's only 3 that really offer truly independent brokers. You have to be captive. So you got Mutual Omaha, you got Thrivent, and you've got NGL. Mutual's been along all the way through. Of course, Thrivent and National Guardian came back in the markets here, 5 years ago or more to kind of fill the void where the other carriers have left. So again, the carriers are leaving. But we're really seeing not just the carriers, but the long-term care market, as it matured, started to have some growing pains and some real issues. And so it really caused a lot of people to shy away from long-term care. Back when I started, even after selling long-term care, I got more into recruiting and designing plans and designing marketing plans. And we had all kinds of agents. We would go on the road and we'd fill hotels with agents. We didn't have webinars back then, but it wasn't hard to get 50 to 100 people into a hotel room. And as the time went by, we'd be lucky to get 5 people in a hotel room. We do our seminars. So the carriers have kind of left. The agents have certainly gotten out, and the consumers have kind of shied away from a little bit. Why this mass exodus? Well, why did the carriers get out of the market? And this is something, again, you could argue a lot of reasons here. My personal thing, and I've said this to, a blanket sweeping statement, when there's 50 companies and now there's 3, that just tells me that if carriers are leaving a product, they're probably not doing very well with it. They don't like it. It probably means not good for the insurance company, but great for the client. And so when people kind of look at this as a negative, saying, great, the carriers are getting out of the market, I don't know if it's I would tell me that would almost even alert me to saying I better buy long-term care while I can before all the carriers get out. But why are the carriers leaving? There's just so many issues with it. For one, as the rate increases have happened, as things have progressed, we're realizing the real true cost of these policies and how to price them correctly. The reinsurers out there, the companies that back the long-term care premiums are requiring the carriers to cover a lot of money in reserve ratios. The loss ratios are set up by states, other state regulations. It just becomes very capitally intensive to administer and to have long-term care. Plus, of course, the long-term interest rates and continued long-term care interest rates in this country have been in the toilet. And so long-term care companies are banking on a 25 to 30-year investment period to pay these claims. And so when those long-term interest rates dip, that affects them. Persistency, of course, they thought it'd be around 90 when they first started writing these policies. Turns out to be 97, 98. Plus, another thing hitting the market for the carriers, they have to take a look at a society. You're dealing with a society now that is a lot heavier, a lot more depressed. They have more health issues than 70-year-olds did 25 years ago. So we're just seeing a lot more health problems in our generation. In other words, more need for care, I would argue. There's some negative customer feedback out there with the unfortunate, huge rate increases that have happened with some carriers, most carriers. The thorough underwriting, it used to be a little less rigid. It used to be not quite so thorough. Well, when you start having a lot more underwriting requirements, you start getting a lot more incompletes. So it becomes expensive to administer all that stuff. All the overall administrating costs of LTC, just again, you've got carriers that kind of shy away. It's less profitable. They started looking at things like the hybrid as being more profitable for them. A little less work, and collect more premium. Doesn't hurt them more as far as liability. So all these things really just, I think a lot of the carriers have just shied away from it. It's just too hard for them to really safely make money. And they have these giant claims that will hit them, in some of the older blocks, the legacy blocks that are still hurting them. It's just hard to correctly price that stuff to be safe, I guess, moving forward for a lot of carriers. So they've just kind of gotten out of it. Okay, why have agents left? Well, again, most of the agents out there I talk to, the first thing, well, it all gets declined, Jeff. I can't write this stuff anymore because everything I write gets declined, and underwriting's become too tough. Every time I write a case, they have to see this, they have to see an EKG report now, and now they need additional records. Rate increases, obviously everyone knows about it. I don't want to talk about it. Even though we're more stable as an industry now, the prices are actually now priced where they probably should have been to begin with all the growing pains we've had. They still, unfortunately, the last 20 years of all the rate increases have really kind of, just between the agents and consumers, just left a bad taste in their mouth. The new policies, of course, going forward now are 2 to 3 times expensive they used to be. So they have gotten very expensive. It's hard to get a lot of people that can afford it. Certifications. I have other guys telling me I only write 1 or 2 of these a year. The onesie twosies, if you will, agents that we call them the onesie twosies, which really made up a lot of what GoldenCare did. We have our specialists, we have our diehard long-term care writers that put up hundreds of thousands of premium. But a lot of our guys are financial planners, med sup people that trip across to long-term care once in a while. And a lot of them don't want to deal with the certifications now. So that kind of hurt the agent base. A lot of unhappy clients. And again, the popularity of these hybrids started to rise as the financial planners start dipping in there, trying to pull clients away. So agents, again, have just it's gotten a little too tough for them. I hear it a lot. By the way, I think just because it's too tough, there's no reason to give up. I'm hoping to come out of this on the backside of this saying that there's hope or there's customers. Why are the customers kind of shying away? Well, again, the lofty rate increases got too expensive. Higher price policies are hard to afford. A lot of customers out there have this impression that they're uninsurable too. They don't want to apply for long-term care because they're figuring, I probably can't get it anyways. I'm diabetic, I'm overweight, high blood pressure, etc. There's a loss in consumer confidence, certainly, with all the life and high long-term care that are flooding the market, which, by the way, are not a great solution. Now I have a little topic on that. I'm not going to go down that road, but for whatever reason, people are trying to avoid the use it or lose it. By, what if I pay all these long-term care premiums, I die in my sleep? So they've been shifting over to these hybrids, which are really, the client kind of takes the shorts on those most times. But anyways, there's just a lot more product options other than traditional long-term care. The lengthy application process, claims, also sometimes the long-term care claims, the 2 out of 6 EDL deficiency has to be a 90-day certification period. So things like cancer, where people get diagnosed with cancer, sure, it's going to be covered in long-term care, but if you look at most cancer patients, the first year of their cancer, they're pretty much independent. It's that last 3 months, 6 months when they're, on their way out is when they really hit that 2 out of 6 ADL deficiency. So, most of a cancer claim is not going to be a claim. So we have a lot of those things with long-term care that just, maybe customers are not as keen on it. But I still do believe, by the way, if you have healthy young people that are trying to pass the risk of long-term care needs onto a carrier, traditional long-term care is still the way to go for the healthy young and etc. Problem is, it's just not the case anymore. All right, so all these people have gotten out, carriers, clients, they've been kind of leaving the agents, leaving the long-term care market. Meanwhile, we all know this, the aging of America. I don't have to bore you with all this, and we are aging, and we're running out of people to take care of them. I think I have some caregiving stats come up, but I always like to, instead of these scary stats about all the aging of America, I used to, and just take this for 2 cents here, let me just take a sidebar. When I was painting a picture to people out there about the aging of America, what I would kind of tell them is, just try to imagine, in this country right now, we are simply running out of places to put the tidal wave of care that's coming. People know, they couldn't, in this country right now, if you were to stop building hospitals, if you were to stop building hotels, if you were to stop building roads, all construction projects, parks, etc., and if you were to take every carpenter, every masonry, every roofer, and if you were to take every nail and cement, mortar, and 2x4, and all you did with all these resources is only build nursing homes over the next 10 years, you could never build enough nursing homes to house all the people that are coming that need care. On top of that, you're running out of able-bodied caregivers. So you got a tidal wave of people that need the care. You got no place to put them. This is why things like Carnival Cruise Lines are converting their ship lines into assisted livings that float. Hotel chains, instead of seeing these high rises, now you're seeing these like Marriott Courtyards and Bridgeports by Holiday Inn. They each of the rooms are maybe 3 stories high, but they've got their own kitchenette, they've got their own living room. All those buildings will be converted into assisted living. So you try to paint the picture instead of with stats, just saying it's literally going to be a changing landscape. There'll be more people in adult daycare than there are in child daycare. Everyone can envision the little kids in every street corner when they're going to work in the morning, seeing all these kids being cared for. If you kind of paint those kind of pictures, I think it helps talk about this tidal wave. Because the fact of the matter is, you've got COVID that's mounting. All the COVID stuff and all the trouble that nursing homes had. One of the stats that stay out here is, if you went to a nursing home, you were basically 11 times more likely to die from COVID than if you were cared for at your own home. In other words, you want to go to a facility, 37% of those people receiving care in a facility contracted COVID. People have received care at home, only 3%. So yeah, you go to a facility, good chances you're going there to die, right? And people are afraid of this now. Because of all that COVID stuff, people are keenly aware of long-term care. So you got a lot of seniors, a booming population. They're keenly aware with COVID, and the Washington Trust Care Fund, I'm not going to bore you with all this, but the state of Washington now is forcing people to buy long-term care. More states are going to start doing this. take money right out of your paycheck to fund some type of a long-term care plan. California's looking at it now, New York, a couple other states there. So there is an increased awareness of long-term care, along with a huge population hitting us. So at the end of the day, the demand for long-term care, short-term care, home health care plans has never been higher, right? And it's ever increasing. 90% of married couples are going to need care. 90% of adults have never had a real discussion about it. 61% of people surveyed would rather die than go to a nursing home. Consumers are terrified. They'll end up in a nursing home. They're waiting for someone to come and mention long-term care, short-term care, and home health care. All right, so this all sounds like, great. It sounds like a long-term care. Rob, we've got us all excited to help all these people out. And then there's a problem is, let me go one more slide here. We go to that. Short-term care versus home care only plans. So again, we had this short-term care option along with long-term care and home health care. All these people we want to help, but sometimes with long-term care it doesn't work. So if we start selling short-term care, actually I think this slide was supposed to come up a couple later, but it's okay. Let's go through this. So I mentioned this a little bit. We're running out of able-bodied caregivers. From 2015 to 2020, the number of unpaid family givers increased from 43 million to 53 million. About 20% of the adult population, about one in three of the workforce are currently caring for an aged parent, a loved one. 78% of adults living in the community need long-term care and have to depend on the family and friends as their only source. So 3 out of 4 people that need the care, they're getting it done from family and friends. So who is the paid caregiver? Well, the home health aide, it's 53% of the time, again, generally not covered by Medicare. CNA, certified nurse assistant, does the next biggest role. Third one there was family and friends, right? So, independently paid. There's a heck of a lot of them up here, some 53 million that are not being paid. So I would argue that friends and family are doing a majority of this care. And so that's hard to get them paid sometimes with some of the long-term care plans or some of the home health care only plans. Okay, so why do I feel like short-term care can kind of save this industry? Let's compare the two, long-term care to short-term care. Okay, long-term care plans have a minimum of 2 years, 3, 4, or 5. That's a lot of risk for an insurance carrier to take on. Whereas again, the maximum for a short-term care 1 year, which caps the individual risk there for the carrier. That sometimes are reusable at one point, but inflation that can greatly increase a carrier's exposure and risk. But the limited benefit of a short-term care can kind of soften that inflation blow to the carrier. It's only going to pay out for 1 year, even if it does inflate. The risk of the catastrophic claim, that Alzheimer's claim that goes on for 17, 18, 20 years, right? There's ones that can really blow up some of those old legacy blocks they have out there. Where again, in short-term care, since it's a limited benefit period, there's no real catastrophic claims going on. Much more stringent under required with long-term care. With short-term care, we can fill the net a lot wider. We can take on a lot more risk because we're only, again, giving them up to a 1-year benefit that's reusable twice. Long-term care has the big apps, the big delays, the issues. Short-term care, much shorter apps, rarely need to pull in medical records. Very fast issue times, 7 to 10 days. So again, you're seeing here, the short-term care is flushing out all the problems that people had with long-term care. The reason why all the agents were leaving long-term care. Added premium needed to cover the block, the rate increases here. Short-term care, they can keep it very flexible and affordable. With long-term care, there's a lot of complexity to the products themselves. Certifications were needed by the agents. With short-term care, it's much simpler, no special certifications. So if you kind of follow my drift of this thing, and again, I don't know if I love the order here so far, but short-term care is kind of allow us to go back to the future and be able to protect and help the older prospects, at the end of the day, help more people. So yes, people left the long-term care market. There are a lot of issues with it. Nothing that was unsurmountable, because we certainly still write a lot of folks. Half the people we write long-term care still get it. You could argue that half the people that you write are being declined. Well, that means half are still being helped. But if you're like me and like a lot of the agents out there, we want to help more than just half our people. So the idea here, this is the good old days, right? People helped. We could probably get 78, 90% of people that we wrote, we could find something for them. Okay. Now, 2008, things started to change, right? Carriers started to have tougher underwriting issues, more problems. We could help less and less people until where we are today here, where literally, because of all things that go on, we're having a hard time. We can create the need for long-term care, but at the end of the day, we can't get them insured. So we create this need, we get them all kind of worked up, we point out this obvious missing link in their financial plan that they need to address. And then because of the fact that 44% of 70-year-olds are being declined, 30% of 60-year-olds, we're helping just not enough people. So as an industry, as an agent base, it's really a bummer to create this need and not have the options for them. And so where we want to be, right, we want to take this and go back to here, right? That's the idea here in this long-term care industry. If we can all, as agents, create this need, but then have viable solutions for them to do something with it, that's where you really want to be. And that's kind of what the short-term care shift is going to allow us to do. I love the slide they're actually tying right up together, Back to the Future, because I really do think that we are going back to the future here. The short-term care industry it's growing rapidly. There's more product offerings coming. Where long-term care is known for its in-depth underwriting, short-term care is stepping up to offer coverage that with similar settings with less stringent underwriting and lower premiums. So it takes the affordability back into people can afford it and people can get it, right? So this will help more of your clients qualify for and afford coverage. So we are seeing this shifting. And again, now there are carriers coming out, more new products coming out, more new options. We always had the home healthcare only ones. You had Aetna, this is probably my next slide here. Yeah. So you currently had GTL's Recovery Cash, Aetna's Recovery Care, great products. We've marketed them here at GoldenCare for some time, but there really has been not many other than these two for some time. So you'll see the states here that were one's approved or both approved, there are more products coming, hopefully more states are represented. We currently, GoldenCare is in the process of putting together the OmniFlex plan, right? This plan is going to be fantastic. It's going to basically pick up a lot of stuff that some of the other ones maybe couldn't pick up. This will be out in June 1st. And so this plan is, again, another one in that short-term care arena. And we also have other ones in the works that we're coming out with, kind of a in between long-term care and short-term care, as well as another short-term care plan. So we have more products coming here at GoldenCare. Can't tell you exactly the carriers yet in these things, but this is where it's going. It's part of the reason we wanted to do this webinar is because we do really feel that that's where it's going. You're going to see a lot more of these short-term care plans because it's great for the companies. They don't have to they're so much at risk or exposing themselves to so much danger. They can help a lot more people. We as agents can help more people. So again, with 90% of claims don't exceed 2-3 years, you don't have to sell these big 5, 6, 7-year plans. If you can sell someone a reusable 1-year plan, you're taking care of 70% of their risk. And remember, when they couldn't get anything else, and they're very keenly aware of it because their neighbor, their spouse, their parents went through it. So the demand, like I mentioned, COVID and the Washington Care Funds and the aging of America, the demand has really never been higher. So we need to have better and more solutions for them. I wanted to quickly escape here and show you one more thing here before I kind of wrap up. I am going to allow for questions. I probably should have said that to begin with. So if you have a question, you can type them in. I'll try to bring that up here in a little bit and answer those. But let me show you one more thing. So in this short-term care arena, that's coming. So GoldenCare has put together a proprietary tool here that's really going to help us with when you go into this market. When you're already in the long-term care market. So depending on what ailment you have, if you know the challenge of long-term care is when someone tells you they've had a stroke or someone tells you they're diabetic or someone tells you they've had liver problems or they have MS, or we have to rifle through endless underwriting guides to try to figure out which carrier will look at this person. So GoldenCare has put together this nice, again, proprietary tool that depending on the health situations, it's going to tell me the products that will accept it and that won't accept it. So for example, I'm going to go in here. This is so cool. I tell you what, I'm surprised there really hasn't been more of these, and we are putting together one for pure long-term care plans as well. But this does save a lot of lead time. So I'm going to go in here. I'm just going to type stroke. Okay. So if I have a stroke, it's going to tell me here basically I've got what plans available. If I had a stroke or TIA, I've got True Freedom. I've got GTL Home Healthcare Plan. I've got the new OmniFlex. I've got Aetna won't take it. GTL Secure Home Care won't take it. They'll take a TIA, but not the stroke. Aetna's recovery care, GTL's recovery cash is out. Traditional long-term care, of course, is out. The critical cash plan by GTL, they'll do the cancer care plus plan. So it tells you what you're going to have. What if I want to take it a step further? What if I have multiple conditions? I have a stroke and I'm diabetic. Well, I'm going to go in here. I'm going to put the multiple conditions. So let me put diabetic here. Now, if someone has these two conditions, it's going to tell me basically the plans that will accept it and it won't again. So here again, if you have stroke and you're diabetic and you've had a stroke, pretty much a knockout for anything decent over here. But it'll tell you green says yeah, so that you're okay with GTL short-term home health care plan. You're okay with Omniflex Tier 1, Aetna's home health care plus, stroke, no, the diabetes is okay, but not the stroke. So if they have both conditions, you're kind of looking for that, for the green check here. I can just tell you that this is one of the coolest things out there because we do wonder about a lot of these conditions, what we'll take it, what we can. So it narrows it down. It lets you basically quickly figure out. And then if you want to see what states it's available in, you know, if I want to put Alabama, it'll take the plans out that aren't in those states. So, you know, at a fingertip, for those of you who sell in multiple states, you know, what's the health condition? What state are they in? I can tell you immediately what plans are available. And so we're going to add more and more of these short-term care, home health care plans. So I just wanted to point that out to you that as we move forward in this changing industry, GoldenCare wants to be here to offer those tools so we can basically, at the end of the day, help more people. So that was kind of the gist of the webinar here. Let's see what else fit for a slide. So that's, again, that's the new Instant Pivot tool. That's coming soon too. It's still kind of a prototype right now. We can get you access to it, but we're still working some of the bugs on it. But that's really a neat thing. It's going to really help us kind of dive headfirst into this short-term care market that, again, I think is poised to explode just for the sheer nature of what's going on around us. It's hard on the carriers to do these long-term care ones. It's hard on the rate increases, the cost, the underwriting. So you really have to have a lot more arrows in your quiver in this longevity spectrum. So, you know, and I think we're wrapped up here. Yeah, so remember, healthiest prospects, great, long-term care. But there's a whole spectrum here. Then you follow through all the short-term care plans, maybe end up with the home care only plans. But just remember, we have a lot of products that can help you. This industry is not dead. Matter of fact, I think with these short-term care plans coming, it's really going to help this industry. It's really going to start helping a lot more people. And I think that's going to help us overall. So I'm excited about the short-term care. I'm excited in the shift that we're seeing. And I want to thank you guys for coming on board here. It's supposed to be a half hour. I'm at 26 minutes after. Hope it was somewhat helpful, or might change your that one slide in there, but we'll get a copy of these out to you. Let me see if we have any questions here. Bear with me. Okay, got a couple. Yes, there's a couple comments here that, you know, the problem with short-term care, of course, is that it's not approved in a lot of states. You've got some states that really don't, you know, Jersey's tough, you know, Florida. So, you know, what do you do in some of those states? We're always working with the state insurance commission offices, trying to get these things filed, trying to take certain riders out that will make them happy. So, you know, we get some progress, we don't. So overall, again, getting some pretty good feedback here, good presentation. They're agreeing with the concept that short-term care is going to be necessary. And that's all I really got. So I'm going to go ahead and wrap this up. Yeah, then I got someone else here mentioning, which is exactly right, Pat. You know, there are a lot of folks who can't get traditional long-term care. There are a lot of folks who know the need's there. They apply for it because of some health condition, they can't get it. And so rather than leaving them with nothing, knowing that 90% of claims don't exceed 2 years, having a reusable 1-year plan is going to wipe out about 75% of their risk instead of leaving them with nothing. Now, yeah, the cost is half of long-term care, so you're taking away some of their risk and giving them the ability to pay family members. That's the newer short-term care plans are going to cover some of the family members that aren't covered in the current plans, cash payments directly to the insured so they can pay anyone they want. Inflation that's going to cover both the home care portion and the facility portion. A home health aid that goes all 360 days, not just 60 days. No hospital stays required. So you're just going to see a lot more things covered in these short-term care plans. It's not long-term care, but it's the next best thing. So with that, I'm going to go ahead and wrap it up. So I want to thank everyone for coming on board. We will get a copy of this presentation out to you. If you have questions, cases, things you're not sure about, you got a health condition, you ran across a couple that you thought you could help, and then if something today triggered the thought that maybe you can help them, give us a call. We're happy to help you go through the underwriting guides, find a carrier or plan that will make sense for you. And we just want to, again, we want to thank you for coming on board. We want to help you help more people. So with that, I'm going to say goodbye. Thanks a lot. We'll get a copy of this presentation out to you. And any questions, please give us a call at the marketing office, 800-842-7799. And good luck selling. And if you didn't get a chance to see this or listen to all of this, all of our webinars are recorded on our website at goldencareagent.com. So any of this or any other topics, you're feel free to go through those. Anyways, with that, thanks. Have a great day, great spring, and we'll talk soon. Thank you.
Check out our website, goldencareagent.com, or give us a call at 800-842-7799.